I had to start all over again as a beginner, and I was only given the option to choose one indicator or one tool for that matter. I would probably choose a really basic tool like a Trendline, and I'm going to give you all the reasons why in this video. The first reason I like to use Trendlines is because they are super beginner friendly. All you have to do is line up a trend line and find 3 or more tops and bottoms, and then wait for the breakouts and retest of that line, and then you have yourself a very high probability trade. The second reason is because having too many tools or too many indicators can cause conflicting information or paralysis analysis, which can be very detrimental to your decision-making process. And last but not least, trend lines have been used for hundreds of years and are still exclusively used by some of the most wealthy traders in the world. Now, with all that being said, let's get into it. First off, it's important to know that there are 2 types of trend lines. There are horizontal trend lines and diagonal trend lines. They can be drawn both above price action or below price action. Of course, the same thing goes for diagonal trend lines. Now, in order to be effective, you're gonna need to know how to draw a proper trend line. And in order to do that, you're gonna need to come over to this left-hand column. You're gonna go over and grab this top choice and go ahead and find the top of any channel for a diagonal trend line, and go ahead and trace it down and try and match up as many tops as possible. Minimum is 3, so you need 3 peaks. Okay, so we have 1 here, we have several candles here, so there's a whole bunch of candles that touch this trend line, and the longer and the more touch points, the stronger it is. Now, once this trend line is broken, I expect price action to head to the upside after a quick retest of that broken line. Now, if you draw the trend line beneath price action, expect price to head downwards once the trend line is broken, and more importantly, retested before it heads to the downside. Similarly, if you draw a horizontal line on top of the price action, once it is breached and it is retested, then price action should head up much higher. Bingo. Now, of course, opposite is true if you were to draw the trend line beneath the price action. Once it is broken and retested, you should expect price to drop much lower. Now, why do I keep emphasizing these retests like a broken record? On this very example, you will notice if you were to scroll back and zoom out a little bit, you're gonna see 1 fake out, 2 fake outs, 3, 4, before price action actually broke out and headed to the downside. Now, how do you know if it's a real breakout or not? Well, here is a pro tip for you. If price breaks with force, meaning there are a lot of big candles, then you can safely assume that there are probably some fair value gaps, right? And in this example, I have 3, which I'm just gonna make 1 big one so you guys can plainly see that once price breaks through the trend line, comes back up to fill the fair value gap, now you have yourself a perfect entry. Let's look at another example where I have a bullish diagonal trend line, and as you can see, there were several attempts where price tried to break out of this trend line and trapped a lot of traders that try to jump ahead early without confirmation. Now, once price breaks out with force, you will know because, again, you will see that there are fair value gaps that are printed on the way out that will eventually fill that gap after the retest. And this is a much higher probability trade. For extra confidence, you always wait for the high of the initial breakout to be broken to enter the trade. Well, you might be asking, Jared, how do you know when to get out of the trade? Well, let me tell you, same way that you got into the trade, and let me explain. Now, if you know anything about candlesticks and candlestick theory, which I'm hoping that you do, and if you don't, let me explain this to you. There's a high here, right? You have this high that broke, right? It broke right here at this line. So this currently is your high, and you have a low from this high, which is right here. Okay, so now that we've established that we have a high and a low that were broken, now we're gonna look for the next high and the next low. Okay, so you have the next high, which is right here, this candle that broke, right? And then you have a new low, which is this candle right here. Now, is this high and this low higher than this high and this low? Yes, it is. So the trend is continuing until that trend no longer exists, right? And you could also draw a line on top of this so that you know that once it's broken, which it was with this candle, that you now have a new high, right, which is right here, and you have a new low, And then you can draw a line across that, and as soon as that breaks, now you have a new high and a new low. And you can keep this pattern going, right? New high, new low. And as long as that continues to happen, the trend should continue, right? It's got a new high, and then you got a new low, right? And then you got a new high, but then something else happens here, right? Right? You have this low right here, and then what happens since you have this high here now? What happened to its low, right? It broke past this former low, which was right here. And now your uptrend is now broken, and we are now in a downtrend because now we have a new low here, and then we have a higher low here, right? And so as soon as you see this is probably, as soon as this happens, when you should get out of the trade. So I hope you guys learned something off of this, and if you did, please hit that like, share, subscribe, all the good stuff. I will see you guys on the next video.